There are two ways you can set up a pension scheme in KeyPay, using the Pension Sync integration or manually. Today we're going to look at setting up a pension scheme manually. You can access the pension settings page via the payroll settings tab, which can be found here or here. The pension settings page is under the business settings section here. To add a new pension scheme, simply click on the Actions icon on the right of the screen here and then select the Add Manual Scheme. Here you have the option to import the scheme directly from Pension Sync. This will be discussed in a later video. At the top of the page here, you can amend the staging date by clicking on the pencil icon here. You can then click the pencil icon for the re-enrolment date. You'll notice that the re-enrolment date defaults to 3 years after the staging date. You can edit this once you have entered the staging date within 3 months from the original staging date. You'll then need to add the following details. First, you'll need to enter the name of the scheme, provider name, this is the name of the pension provider, and the employee number, this is the ID that is given to the employer by the pension provider. To the right of the screen, you'll need to add the pension admin details. This is where you fill in the employer's name and address. The name is the name of the person who usually communicates with the pension provider. Once you've added these details in, you can scroll down and press Save. You can now manually add your contribution plan. You can do this by clicking on the Add icon to the right of the screen. You'll then need to add your contribution plan details, such as the plan name. You can use the name of your company, or if you're using multiple plans, a name that makes it identifiable, such as weekly, monthly, or all employee. The contribution group ID can be the same as your provider ID above. The pension type can either be net pay or relief at source. You can also choose if the scheme is an auto-enrolment scheme or not. You can tick this box here if you want the pension to calculate the pension on qualifying earnings. Next, you need to add the employee and employer contributions. You'll also be able to add a salary sacrifice or NIC rebate if necessary. You'll notice you only have the option to add a percentage here. If the employees are paying a fixed amount per month or week into their pension, you'll need to go to the individual employee file, pay run inclusions page, and set up the deduction this way. The next field is for you to add the frequency the pension will be paid. You can choose from weekly, fortnightly, 4-weekly, monthly, quarterly, biannually, annually, tax weekly, and tax monthly. The final section at the bottom here is your postponement rules. Your business may or may not use these. Please note that if you choose to use the postponement rules, they will only apply once an employee has been assessed as an eligible job holder. The postponement options are available for the following: when the employee reaches their duty start date, when an employee joins a company, when an employee reaches the age of 22, when an employee becomes eligible after initial assessment. This rule will only be run after an employee has already been assessed in a prior pay run. To set a postponement, tick the rule you would like to set. You then have a further 3 options to choose from. You can postpone for the following number of months, postpone for the following number of pay periods, or postpone to the 6th of the following number of months. You then have the choice to select the period 1 to 3, whether that's months or pay periods. If you don't want to set a postponement rule for everyone assigned to the plan, you can also set an individual employee's deferral date via the employee file, pension settings page. When you are happy with your contribution plan setting, press Save at the bottom of the screen. You can edit a contribution plan by clicking on the contribution plan name. You can then make your changes by clicking on the box you would like to edit. To save any changes, you must remember to press Save at the bottom of the page. When you create a pay run, your employees will be assessed and postponement will be applied to any employees that met the postponement rule criteria. Postponement letters will be created to send to the employee once the pay run has been finalised. When the deferral date comes around, employees will be assessed in the pay run and, if required, enrolled into the pension scheme. You can add as many contribution plans as you need by clicking on the Add button as described above after you've saved your first plan and filling in the details appropriately. And that's how to manually add a pension scheme. We hope you found this useful.